Alright, welcome back. In this video we compare mutual funds versus index funds. The battle of the titans. It's all right here. Alright, so again, let's just look back at mutual funds and what they offer. Then we'll do the same for index funds, and then we can make that side-by-side comparison. Alright, so nice thing about mutual funds is that they reduce risk because of diversification. So remember, this is an actively managed fund. Somebody picks out the stocks or bonds for you, stocks and bonds potentially. And it's nice because rather than you going and buying one single share of a company or one single stock or something like that, you get a bunch of different companies, a bunch of different stocks or a bunch of different bonds, and all you had to do is buy a mutual fund. So that's kind of awesome. It reduces your risk because now it's not about one company anymore, but lots of different companies. So whereas putting all your money in one stock is risky because if that company goes out of business or something happens to it, your money could be wiped out. That's unlikely to happen with a mutual fund because you own so many different ones. So the diversification here is great. They're also convenient. You get the expertise of a professional manager, and they offer relatively low fees, so about 2 to 3%. If you were trying to make this same diversified portfolio yourself, you would pay very high fees buying and selling each of these different stocks and each of these different bonds. So some good points for mutual funds: convenience, expertise, low fees, diversification. All that's great. Index funds, on the other hand, again, remember they are a type of mutual fund. They are passively managed. That means that there is not a person who is actually picking and choosing the stocks and the investments. Rather, what happens is that you earn the average return of a particular stock index. So the most famous index fund, it's the original index fund, is the Vanguard 500. And what this fund was designed to do was essentially take the S&P 500, which is essentially the 500 largest companies in the United States, and it just buys a little piece of each of those companies that's traded on the S&P 500. So it buys a bunch of those companies, in fact, in proportion to how large they are among the top 500, and that's it. It doesn't try to do better than the market. You get the average return of the S&P 500 if you bought that fund. This is very low risk in the long run, and I stress in the long run. In the short run, it might have bad weeks or months. There are even bad years, but in the long run, you can see this is from 2010 to 2018. You can see that chart. A 200% return on investment over that. That is abnormally high. I will grant you that it's not often quite that good, but we've had a pretty strong market for the past, this decade essentially. But again, in the long run, if this is a long-term investment, it's hard to do better than index funds. They offer convenience and extremely low fees. We're talking from 0 to 0.2%, actually. Well, even 0.2% is on the high side. So Vanguard offers ones that are 0.03%, and Fidelity just offered one that is actually 0%. So while mutual funds have low fees, like 2 to 3%, there's no comparison. 0 to 0.2% is much, much lower. All right, so which one should we go with? Index funds or mutual funds? Again, there doesn't have to be one right answer for this. Let's look at the pros and cons here. Mutual funds give the investor a chance at having higher returns than index funds because you do have a fund manager, remember it's actively managed, picking the assets, so they could potentially do better than the average because the index fund is just taking the average performance. If you pick the right stocks, you could do better. So mutual fund gives you that chance. However, index funds typically outperform mutual funds about 2/3 of the time in an individual year, or actually index funds beat 2/3 of mutual funds each year. And in the long run, index funds over time defeat almost all mutual funds, nearly without exception. They both are good because they both provide diversification at low transaction costs, but mutual funds, while they offer low fees, which is good, index funds offer extremely low fees, which can be even better. So for my money, I love index funds. Make sure you subscribe if you haven't already. Hit that like button. This has been a LaMoney production.
Every bro on the go needs to know that there's no accepted substitute.